Well, good afternoon, everybody. Welcome to our end of July 2024 bull session. My name is Mark Robertson. I am joined here by my dear colleague, Ken Kabula. How are you today, sir?
I am just recovering from a nice, beautiful trip up north to Petoskey and to Harbor Springs, and we're trying to get our trees all trimmed up so we can put our new deck on, and then we're taking off for Traverse City in this coming Sunday. So we're traveling while the weather's good and while we can still walk and talk. That's a nice thing to be able to do.
Yeah, that mobility is always important.
Yes, it is.
And the voice you just heard was Kim Butcher. Kim, are you also traveling? Are you managing?
No, I'm sitting at my kitchen table because I just got an estimate to get my house is 93 years old and has cast iron water pipes coming in the house, and I feel like I'm paying roulette.
Oh, nice.
You just have you are going to actually restore the economy of southwestern Indiana if you keep this up.
Mark, I'm going to answer a question for Patricia. Patricia, yes. Mark's sound is muffled, and we've been working on it before we started the broadcast, and that's as good as it gets. He's in the Berkshire Mountains in a room with no headset, and he's using the microphone on his computer, and that's just as good as it gets. We're sorry. Okay.
And probably fighting a little bit of a cold also, so it's just piling on. And then we're also joined by Matt Spielman, who has also been traveling quite a bit, but he did avoid a hurricane by traveling. And welcome back, Matt.
Yeah, it might be a record distance for evacuation from a hurricane. I don't know.
All right.
I'm fascinated, Matt, by your story of landing in Chicago and then taking off for your next leg of your trip from the same gate. I've never heard that happening to anybody. You must have been living right up in Alaska there, I'll tell you.
Well, we were, I've been traveling for a long time, even though I might be on the younger side of this group. I remember, I lived in a small town, so I remember flights where they were not nonstop. You had one or two stops on the way to where you were going, and so it kind of felt old school to me. But they made us get off the plane. We couldn't stay on the plane for the privilege of that.
Yeah, they do that now.
It was actually the same plane, Matt, on top of everything?
Yeah, it was the same. It was the same physical plane. We changed. We didn't get the same seats going on and off.
Well, I was under the impression that you came in on a plane and then it went somewhere, and then you had a connection that came in later. But that's even more unheard of in my book. So that's great, terrific.
Yeah, I think
so. Enough of this chit chat, Mark. We should get going on these slides, okay?
Not a big deal. We are going to take a look at Barron selections at the half for any ideas that it may inspire, especially for tonight's roundtable. The table Kramer's rules probably until next week or the week after that. And then we will continue to talk about the small cap insurgence that's going on right now. And here's our weekly check-in on Portillo's. Again, they are not a sponsor of this session, but they should be. And apparently they've opened another store fairly recently in Michigan and then another one somewhere else. And they continue to expand, and the stock price has had a little bit of recovery. You can see that on the far right-hand side the last few days. They're doing better than Five Below. So I guess
I'm glad I don't own. I'm glad I don't own Portillo's, and I'm glad I no longer own Five Below. All right.
Yeah, how many CNBC jokes are about? Well, the name isn't supposed to reflect the stock price.
Oh, here we go. It's the beginning of the end. All right, here's our standard disclaimer. No investment recommendation is intended. Everything we spend the next 30, 45, or 60 minutes talking about is literally just talking about the discovery of companies and the analysis of said opportunities using the methods that have been put forth by the modern investment club movement for the last nearly 8 decades. So that's what we're here to do. If we own something, we'll try to remember to disclose that. And please do your own homework before making any decision. If you would like copies of the slides, or if you have suggestions for future topics, our 2 email addresses are down there at the bottom of the page. All right, so let's go ahead and press on. The market has hit kind of a midsummer lull, although the small companies have been doing quite well. But as you can see, that shiny green bar on the far right, that's this quarter for the value line arithmetic average. It has relaxed back from the blue line just a tiny bit. And the forecasts put out by value line are now just under 10%. And then our other forecast is around 9. So you're looking at the average return forecast for any company, one of the most important characteristics that we track here at Manifest Investing, being in that 9 to 10% range. So you just want to kind of, use that as your guide. The rhino is in honor of, there is a disturbance in the force. And it doesn't really affect any of you, except that it makes me grumpy in the morning, because what I see happening is analysts dropping their coverage on a bunch of companies. And some of them, and they're doing updates or whatever, but it is quite disruptive on our end as we maintain the database. And that rhino is simply grabbing an adult beverage to mark the
Mark,
occasion.
it's so interesting to hear you say something like that, because I've had a gut feeling for the last 3 or 4 months that the tide has been turning from the talking heads about being fascinated with companies that have no earnings. And I'm hearing more and more just flat out negativity about these companies that keep promising they're going to earn eventually, but still aren't earning anything. I just heard a statement that they're racing, the venture capitalists are racing to come up with a different metric instead of measuring how well they're doing by some of the more traditional methods. They're now looking for metrics that are going to talk about how much capital they can give back to their shareholders or to their investors in the form of real dollars. So I'm interested that you're saying this, because I think those two things are tied together at the hip.
I agree with you. I think you do see that happening in a number of different areas. We had some fun with it the last week or the week before, where they seem to be stunned to discover that the smaller companies that actually had sales and earnings were doing better all of a sudden. And that certainly is not an isolated incident. All right, let's go ahead and press on. Here's just a quick look at our performance perspectives. This is just a quick reminder that our top 10 of the 10 most widely followed companies, we actually keep track of the top 40 as the Manifest 40, but the top 10 are on full display here. And we had recently added Home Depot, Stryker, and CVS Health. And obviously Home Depot is carrying its own end of the bargain, as is Stryker. And yes, CVS Health has been frustrating for a longer period of time than Five Below. So the other interesting thing here for us is the roundtable, which is tonight, shows up here. That is our 14-year-long demonstration that, yes, you can come together, pick companies like the ones at the top of the list, and beat the market by 5 percentage points. So Ken, would you like to add anything to that?
I think you did a really good job, Mark. It's doable by people, and you don't spend 7 hours a day looking for those stocks either.
Okay, we'll just keep pressing on. We've got a lot of ground to cover. Today, we actually do celebrate the arrival of the $2 million man. Jim Gallagher's Groundhog portfolio is now over $2 million. And he's got a pretty good stranglehold on number one. It'll be interesting to see if he can maintain that. But I would also point out that Jim's portfolio on full display on the right-hand side of your screen is an absolutely perfect example of the rule of 5. Take a look at his 5 holdings. And obviously there's one superstar and there's one that's just simply not getting it done right now at the bottom. So kind of an interesting rule of 5 demonstration. That's the reason the 5 is up there. But Ken, I don't know. I was hoping to catch him, but it's getting a little bit more difficult. For those of you, go ahead.
My only regret, Mark, is that I didn't buy Mama's Creations when I ate their meatballs. Okay.
Yeah, he's been on that one for a while too.
Yep.
So the number of clubs is kind of holding steady. There's near record levels. It is good to see those Michigan entries. at the bottom of the page, marching up. So good stuff. And Ken, we'll whisper about you being a number 4. We don't want to jinx you.
Yeah, I'm very pleased to be up there. So I'm looking at what might have juiced Joe O'Brien's portfolio to go from 39 to 5 like that. That's quite a jump there.
I didn't look, but our good friend Joe from Chicago is doing very well of late. Hopefully.
And my family club also going from 56 to 31. That's a big gain as well. So.
Yeah, I did manage to go from 80 or 90 something up to 64th, so I'm coming. So 64th doesn't fit on this page quite yet, but if I get a little bit closer,
if you stay there, I bet it will, Mark. Okay.
All right.
Mark, you and I have what they call time on our side.
That's true, and a couple of the same companies too. So
yeah,
we're both hopeful. All right, so again, that gap between the value line and arithmetic average, we're going to talk more about that, and the Wilshire 5000 continues to be much different than historical levels. So we'll talk a little bit more about that. And Ken, the monkey is creeping up. We just don't want to.
I know, that's annoying, isn't it? That's very annoying. 17th, okay.
That is for those of you that are new to this, that is a dart tossing monkey, and he's in 17th place. Goodness gracious. All right, just some other stuff that's going on. This slide does not include anything about Five Below, but the Magnificent Seven have had a couple of rough days here lately. And the Oprah reference is to our 14th birthday for the round table. Let them eat cake.
Well, the last time I glanced, NVIDIA's having a really rough day today. So.
Yeah, they're bound to have a few of those.
Absolutely.
Stock prices fluctuate. My portfolio was up nicely until I looked at it this morning, and then it went the other way. All right. Here's a chart from Ben Carlson. It's a little bit busy, but the main point that it makes is that the smaller companies, when compared to the larger companies, like in the S&P 500, you basically end up with this imbalance. And what this is a look at is the equal weighted index, which is similar to how we think of the planet when we use the value line arithmetic average. So they're comparing the equally weighted index. So all of those 500 companies have the same amount of influence on that index. So the smaller and more medium-sized companies would be in this equally weighted index. And just comparing that versus the cap-weighted S&P 500, you can basically see that the difference has never been bigger. That ratio is down to 36%. It's been nowhere near that in the past. So again, what that is suggesting is that's Magnificent Seven, these stocks, we know that they have been on quite a tear. And there's hundreds of other companies that basically have not been on that tear, that probably, there's some in there that deserve it. So again, we think
this graph is great news for those analysts that believe in reversion to the mean, because that means the equal weighted has a pretty good leg up if we go back to anything approaching normality, whatever normal means in this world.
I think just like as we did last year, we did cover the best small companies portfolio last week, and it's doing quite well, Ken, so we won't talk about it anymore. But just like last year, I think we begin our search for our small companies here in the next few weeks.
Yes, we need to. We really need to.
And just begin looking for those wonderful opportunities. Okay, here's a look on a longer time scale and looking at 22-year rolling returns. And I guess the major takeaways here, again, this is real, as it says up here, so that means that you have to add inflation back if you want to think about absolute numbers that we kick around all the time. So you have to basically add 3 points. So the long-term average is 7 plus 3, or 7.5 plus 3. Again, that's right at Ken's 10.5 number. So it's kind of good to see that reinforcement. And then my takeaway is that, worst case situation, a 4% return, 4.5% return right here. it's not to me, it's not exactly the end of the world. Your thoughts, Ken?
I've always liked charts like this that put things in perspective, Mark, and I always like charts that take away a little bit of the ammunition from the doomsayers. You know, you can't watch the talking heads without having somebody preaching doom and gloom every other half hour. So I think this puts things in perspective, and maybe it tamps down a little bit of the exuberance from people that think they can make 25 and 30 and 35% out of the stock market on a regular basis. You know, it's not gloom and doom, and it's not take off rocket ships either in either direction. But I'd settle for that nice 7.5% real return any day on average for a long, long time.
Yeah, I hadn't really thought about it in those terms, Ken, but you're basically talking about there's one point in history that has been at 17% for a 2-decade period back there. And so 17 is definitely quite special if you get anywhere near it over the long term. Interesting. Kim or Matt, have any thoughts on this one before we trudge on?
You just never know. You can have a very clear thesis of what happens, but you know, it can get shot out of the water.
Yeah, I mean, I put that orange box on there because that's my basic horizon as an active investor, going back to the early days with the Chicago Volunteers for better investing. And that is kind of my, you know, when I think of the investing environment, that's what I have lived through. So I didn't have any of this over here. This was a rough period of time after the 60s. But the other thing that I kind of take away is you had this period in the mid-60s and then again in the mid-90s. I remember that very well. There are people that believe that, yes, we will have another peak, you know, within the next 10 years or so, like this one. In other words, this is headed up here in some way, shape, or form on kind of a 30-year cycle. So there's basically people out there that finally are beginning to agree with us that you ought to be investing regularly and stop overthinking it, and hope that we actually do see that come to fruition, because it's fun when it happens. All right, let's go ahead and press on. This is just update, Ken. We did spend a little bit of time talking about favorite books on investing, and I did a little bit of arranging of the closet and basically tried to put the groups, the books that we have talked about in the past, into 4 different categories. And I think the categories make a little bit of sense. I used classics up at the top. Some of those are absolute classics. The other ones are special and near and dear to our heart type classics, like this one here, or Cloonan's book here. But those ones on the left are definitely regarded as classics. The ones down the middle are stories about people who have been successful investors, a little bit of methodology in there too. And then some of our favorite tool books, and then some themes. And we're going to be actually taking on a few books here in the next few months that will probably be adding to the list. And Ken, I don't think you would argue that against Morgan Housel's book being added.
Oh, not at all. No. And Mark, the most helpful book that I've found, at least as I'm teaching other folks how to invest, is down under fundamental tools, and it's that one called The Accounting Game. I think that provides a wonderful, wonderful basis for a lot of folks that went to school and studied things other than finance. It gives a good grounding into the kinds of vocabulary and the kinds of things you have to think about it just a little bit as you're studying a company. So I think, I don't know if that one, in my mind, I would put that in the classic category, but I understand it's a fundamental tool also. I guess the one that's missing from the list here, Mark, and maybe at some point the picture belongs here, is that 84 Investors Manual from Better Investing that we think Nicholson had a lot of influence in.
I think that's
because we use that an awful lot. Yeah, pardon? Oh, I missed it up there. Okay, yes, I missed it. There it is. You have it there. Great, great,
We tucked it in the classics. So yeah, we will
great.
continue looking for helpful tomes that we can add to this list. But here is one that we do plan on taking a look at. I grabbed a copy and probably will be starting it on vacation here within the next couple of days. This book was actually featured as the #1 book on this list from the top 100 most popular investing books from Goodreads. It's up in the upper left-hand corner by William Green. And it just carries an awful lot of, when the people that are mentioned there are profiled and or recommending the book, just sounds like a good one. So we'll take a look and see what we think.
Go back a page if you could, Mark.
To the books listed?
Yeah. I do believe Morgan Housel on the psychology of money has a new book out called Same as Ever.
Yep.
Our book club is talking about that next. And currently the book that we're reading is really, I've read the first book and this is a reiteration of it, updating it. It's called Influence by Robert, I can't get my phone to open it.
Yeah, we covered it. We covered that one last week, and that's another one that's on kind of the short list.
Oh, it is mind-boggling.
Okay, well, I'll take a look at that one too, Ken. We talked about two books. One was it 100? 1 to 100 from by Phelps, and then your book Influences.
Yeah.
What's the author on the Influences?
Robert Cialdini, Cialdini. I'll send you a picture of it.
Okay, yeah, there is a post in the forum that talks about both of those books in the Manifest forum. All right, so let's go ahead and talk a little bit about core companies. I was in the mood.
Mark,
go ahead.
Could you answer a question? Where might somebody find this list and maybe some descriptive material that goes with this list? What's the source of the list, I guess?
This was, I peeled it off of Twitter, now known as X.
Okay.
So I did put a link to that Twitter entry on the Manifest forum, but I don't know of any specific discussion of the entries on the list. I mean, what I did is I went back and read many of these books. I went back and actually looked at some Amazon references for the ones that I was not familiar with. So,
okay, so you might, if you're trying to search for information about the list itself, you might reference this Goodreads at the top of the chart right here. I think that's a website or an aggregator of information, so you might reference that in your search as you begin looking for where the list came from originally.
I will do a little more looking around just in case there is a catch-all article that does that. But well, I was having a lot of fun just going and looking at some of these I hadn't heard of or was reminded of. As one example, one of the guys that works with Jeremy Grantham, this guy, James Montier, he's an excellent writer, excellent analyst, and I wasn't aware that he had that book out there. And I probably will grab that one. He tends to get a little bit heavier every once in a while, but could be quite good. The other question that I've gotten from a number of people, what's the color scheme here? Forget the color scheme. I don't think I understand the color scheme, and I don't think they do either. These are books rated from 4 to 5 based on citizens basically placing their votes. So anything that you find on the right is not dramatically different. There's good books from left to right on this chart, in my opinion.
I assume those numbers in the upper right-hand corner of every block are out of 5 points?
Yes, I think that's correct.
Okay.
So it's a fun list to kind of go over and go looking for stuff. Now, I would also caution, maybe you set aside the real estate books or the day trading type books, and then that kind of chops the list down to a more manageable task. Okay, anything else here? All right, so with that, let's go ahead and talk about some core investing. Again, I was looking for candidates for tonight's roundtable and came on this article that you can eat the whole apple. You don't have to throw away the core. Didn't know that, so I learned something today. And here is a distribution. I actually put this together for our friend from outside the Beltway, Kevin Gologly. This is the distribution of core scores in the manifest investing coverage of the value line investment average or standard survey. So the companies that are actually in value line, these are our scores. The core score, again, is the combination of quality plus earnings stability and financial strength. And obviously the ones on the right are where we prefer to concentrate. As we've told you in the past, we kind of think that 225 level is where you kind of hit the break point between core and non-core, but that's also a gray area. But just found it kind of interesting to lay out the distribution of these companies. Any thoughts, Ken?
That's fascinating. Our audience is just tremendous. Anthony Bellapina and Marcia Cui have both given us a reference to come up with that list and some explanation about it. So I'm going to post the website and send it out to everybody that you can copy it then and take a look at it. Okay.
Okay. Thank you. Thanks, guys. All right, and then just for purposes of illustration, as Kevin and I were talking about the list itself and the population of companies, the list of companies on the left are the 20 lowest core scores. And again, that's the sum of the financial strength, the EPS stability, and the quality score. Again, it's kind of a doubling down on these two factors because they're already embedded in the quality. So it's an embedding. But again, we tend to think of the companies with the higher core scores as being more likely to be a company that would interest us as an investing community, more likely to be up straight and parallel, more likely to be more consistent. And the companies on the left-hand side don't fit that description very well. And in fact, there's a couple on there that really cause me great pain to think about. Notably, and please be kind here, Ken, I have brought up Emergent Biosolutions a number of times, going back to the pre-COVID days. They were making the COVID vaccine and they messed up at one of their facilities and were never forgiven for that. But there's a couple companies here that are examples of companies that I was tempted by the devil, bought into them, and was handed quite a lesson. And so it kind of smarts a little bit. Now, Ken, you said you haven't owned any of these?
The Vista print I owned a long while ago for 2 or 3 years, and that's the only one that I have ever owned. And I can't even remember being interested in anything else that's on that list. We have talked in some club meetings occasionally about United Natural Foods as a competitor to some other more interesting companies, in my mind at least. But I just think this is a pretty this is a list that's barking a lot. Okay.
Well, Cy Lynch and I both selected United Natural Foods for the roundtable, and I believe we got at least a 40% haircut, if I remember correctly. Some of these are tough. Now, this is an early stage company. And Ken, I think you own this one.
Which one, Mark?
Laser.
Well, I missed that on the list as I was doing my real quick perusal.
I did too.
So one of them stopped barking. I own that one, okay?
Well,
But I've identified it as pure speculation, Mark. I don't advertise it every week or anything like that. It's tucked away, and I try not to even look at it, even on a weekly basis, let alone a daily basis. So
this one was certainly inspired by Matt, and we expect that 14 to go up, Matt. So we are hoping to ride a wave where that number increases.
Nowhere else to go but up.
Lots of room on the outside. I have been tempted to do Peloton, and I somehow have resisted that. And I would note that Carvana, just in making the trip across the country on the drive, I saw a number of Carvana sites, and I think this number probably goes up in the future, but still quite a struggling
I
company.
think, Mark, that the list on the right is much more interesting, and I think that if you don't own a few of these in this top 20 list, then maybe your portfolio isn't as well created as you might think it is. I think there's a whole slew of really great companies here, and I think a couple of them might even be something that are in the buy zone.
Yeah, I'm just going down and looking at the ones that I own. There's 2, there's 3, 4. This one since 30 years with Paycheck. Let's see.
I remember having Jack Henry a long time ago.
I guess I own more than I thought here, Ken. At least 7 of them. Maybe 8.
Mark, our friend Beetlejuice is wanting to know why Portillo's is not on the list on the left here. So,
Well, I would challenge him to go ahead and calculate that core score for Portillo's. You could probably handle that. But anyhow, the company on the right, these are obviously the place where you want to be doing your shopping. This one here, we'll probably talk about it tonight a little bit. This is one of the oldest selections for the roundtable made by Ken 14 years ago, SEI Investments, and it is still in the roundtable portfolio.
and I still own a holding of SEIC in my wife's 401k in her IRA. I think we're going to be talking about Gentex tonight also, aren't we, Mark?
Yes, Sai will be bringing Gentex tonight. And then I am actually going to add Novo Nordisk to the list. So 2 of them are right there. Good stuff. All right. Here's a quick look at.
Mark, I'm getting a question from Joe on slide 15, the one we just looked at. Does the blue font on the symbol have any meaning to it?
It simply means that it's a flag for me in the database that those are held in either a roundtable or some type of a manifest 40 tracking portfolio or whatever. These are actually held in various portfolios if they're bolded or a different color.
And then I can answer the blue in the quality ranking. Anything with a quality at 80 or above gets flagged blue then, is that right?
That's correct. Considered an excellent company by the metrics, our standard metrics. All right, good to go. Here's a look at Wood. We're not going to spend any time on this. We will get our money next week, and then we can talk about challenges or additions to the portfolio. And this one does have Luminar, so there's Luminar. And then tonight, Ken's going to talk about Schlumberger. All right, just thought we would kind of close down. Just take a look at the Barrons roundtable from January. Back in January, they made a number of selections, and just thought we would check it and see how they're doing in 6 months. And you can see that investing, even for some of the best professionals in the country, can be a humbling experience. They check in at about 9% versus a 15% market over that time frame. And there's some good ones, but there's also some that are not very good, at least works in progress. And kind of surprised me. I thought they'd been doing a little bit better this year. Up at the top, you could see those 2 entries by Rajiv Jain, really kind of carrying this whole group at this point. So some interesting companies there, and not the strongest performance. I will say that, the roundtable and Barrons in general has been a pretty good source of ideas for me personally, going all the way back to the 1990s and the Chicago Investment Club days. So it is an area where I watched, should be inspired by, and maybe nudged into exploring an idea. Any thoughts on the group, guys?
The math teacher in me, Mark, wants to caution folks when they look at the annualized column. That's the middle column there, starts out with a 107 at the top. and just remind them that whenever you're annualizing a value that's less than a year, it magnifies the positive and the negative end of it. So you just have to be real careful when you're looking at it right there. You're only looking at a 6 months performance out of the total years. So you're getting some magnification on both ends, just the way the arithmetic works out.
Well, one thing I should probably bring up, and this is actually a bad naming convention here. Anytime the period is less than a year, we don't annualize anything. It's actually an absolute return up to the point where you have 1 year, n equals 1. Anytime n is greater than 1, we annualize it, but it's an absolute return up until that point in time.
So these are real, these are not annualized then, these are real numbers, Mark?
Yep. So
oh wow, that changes the chart quite a bit for me. Yes, okay.
Yeah, NVIDIA has actually doubled, since January.
Okay.
That's what you're looking at there. Okay. All right. So then halfway through the year, Barrons invites them all to basically talk about their selections made in January. It's a good reference. And then they ask them, well, if you could change anything, would you add or take anything away? And some of these are repeats from January, but there are some new companies on here. And we have put them on display here with their growth forecasts, their quality rankings, and their return forecasts, both the par and the prove. I ranked this by highest projected return on value to lowest. And there's some fairly interesting names here. As Ken, I think we've already mentioned, Ken will be talking about Schlumberger. We added Schlumberger to the Buttonwood portfolio last week. But there are some interesting companies, some interesting names on here. It is obvious that these people don't all invest our way. Look at some of these red and black numbers for quality. But,
I'm fascinated by Mattel being on the list, Mark. Louis Vuitton, that company, which is not an American company, has been rumored to have put out a feeler to buy a large toy maker, which is not Mattel. And the rumors are flying now that Mattel might enter into the bidding for this other toy company, which I'm trying to remain nameless with. But that's this Mr. Rogers or Ms. Rogers must see some real positives going on in this toy area right now to pick it on a list like this.
Yeah, it's actually John Rogers. John, runs Ariel. The Ariel
Okay.
funds in Chicago, and John is a supporter of better investing. I have known John Rogers since the 1990s. He used to do a number of programs, and by the way, his genesis or start in investing was investment club based. So it's kind of a fascinating connection. He used to do programs for the Chicago chapter, and they have a pretty good track record, Ariel Funds. So that is that John Rogers. So yeah, he is playing that as a special situation, and there's a number of M&A type eruptions in that particular.
Not to spoil the story, Ken. It is Mattel that was the target of the rumor.
I'm sorry, I have them switched, don't I? And the person that wants to buy is, help me out now, Matt. Now it's blanking on me.
It's LVMH, so it is Louis Vuitton, but
right, I know that.
It's a private equity arm of them called L. Catterton.
Okay, but the toy company that they're speculating might get into a bidding war is
Hasbro.
Hasbro,
yeah.
Of course.
And they have before too. Yeah. They've twice come together. I can't say whether it was antitrust authorities that broke that up or simple finance broke that up, but they certainly have talked about it over the years multiple times.
But if a deal like that should go through, you would expect Mattel to really move a little bit better than 11% in the whole realm of things in the short term at least.
Yeah, I'm sure confirming things as opposed to sort of half-leaked rumors would probably give it a firm boost.
Yeah,
yes.
It depends on how much it's actually moved, already too.
Yeah, that's true. That's kind of like iRobot, right? When you get a bid that's less than what you were anyway, you don't move much.
Yeah, it's surprising. I guess it's surprising also to see a couple of these really low quality names on this list too. I'm looking at something like Paramount, which I thought was kind of dead in the water, but evidently Mr. Rogers doesn't think it is. So
Another acquisition story also. So
yeah, they could very well be. You're right.
Well, and Broadcom's on here, and Broadcom bought VMware, so now it's like 50% hardware and 50% software, and they're big into the AI area.
Absolutely. And the other one on here that I have not actually added to coverage yet that I think could be interesting is this Aurora Innovation. I want to actually run that up the flagpole and see if that could be a potential best small company going forward. So
I've been looking at CPNG. That is like the Amazon of South Korea, I think it is. And Stanley Druckenmiller has a huge position in that. And he's the guy who has 30% returns for 30 years. So it makes me curious.
Interesting. I know we mentioned it probably about a month or 6 weeks ago. Their American operations are headquartered in Seattle, but they are operated out of Asia as a company.
Yeah.
Interesting. All right. So those are on the list for consideration for tonight, but we'll see how that goes. Here's your reminder that we do archive all of these sessions, including the roundtables, on YouTube on the Manifest Investing channel. So you can go ahead and grab that if you would like to. This is our reminder that we're going to take a look at buybacks sometime soon. And again, this is just more celebration of tonight's 14th birthday party. A little variation on a theme.
As a shareholder of Cheesecake Factory, ticker symbol cake, I have to take some umbrage with all these negative connotations about it.
All right, we'll put it in the hot dog pile and it'll be okay from there. All right, here's a quick reminder that we talked about this one a little bit last week, but as we delve into best small companies, starting now between now and Halloween, I think we're going to be spending some time with this and that Vanguard growth fund, small company growth fund. So again, these two articles are pretty good for understanding this microcap world. And I do believe that it's possible to find some intriguing opportunities. All right. I do think that Ian likes to point out that 87% of the companies who generated like 1,000% returns, in other words, 10 baggers or 100 baggers or whatever that is, were actually these microcap companies over the last 20 or 30 or 40 years. So 87%. So it's a good place to go hunting, and we will be doing that. All right. And one more cake reference, just to really annoy Matt. In honor of the Paris Olympics and our roundtable this evening. Any other thoughts, gentlemen, or Kim?
No, I don't think so.
So with that, the Olympics are going along pretty well for the United States, enjoying that. And we will be getting together here in a few hours. So Ken, any other marching orders for tonight or?
Only if you would like to come to the roundtable this evening and have not yet registered. If you send me an email, I'll send you a link where you can press the link and register immediately and make that happen. You can also register for the roundtable on the Manifest Investing site by going into the upper right-hand corner and looking at events. You can also register for the roundtable by going to the Better Investing site, pressing chapters, looking for the Mid-Michigan chapter. We're in the state of Michigan. And once you get to our chapter, pressing local events, and you'll see a tag there for a registration for the roundtable. So lots of ways to do it, and we'd love to have you this evening. It's always a kind of interesting program with a lot of opinions and a lot of good ideas out there.
Yeah, the annualized return checks in at 17% for these last 14 years. So we have been having some fun. Be forewarned though, we will not be providing the set cake. Bring your own cake to the party tonight
And beverage.
and beverages of your own choosing. So with that, we'll go ahead and sign off. And those of you that join us this evening, we'll see you there. Take care, everybody.
Good night, everybody.